Yo, what is going on? So, as you can tell by the title of the video, I did lose a funded account. And I'll go over it because I have my reasons for what I did. But, you know, no one plans on losing, right? No one plans on it going wrong. But if you guys are keeping up, I have this account here that's up $1,000. And this account that I lost today rebills. I checked the rebill date, and it actually rebills tomorrow. And I went through my day. I didn't have a trade, and one thing I do want to talk about is how prop firms literally are designed for you to be unprofitable. Just they are physically designed for you to fail. And I'll go over that a little bit more, but mainly I want to just talk about well, first of all, the reason why I end up blowing this account, since it rebills tomorrow, I was like, you know what? I didn't have a trade going on yesterday. I had lost some money, and on this account, I want it to at least be like 1,500. Like it had to be at least over 1,000 for it to really matter for me in terms of just like keeping the account. I'm not sure why this is so laggy. So I was like, okay, I want to see this account at least hit 1,000 something, and have a decent balance. Otherwise, I don't want to pay $50 because I just paid $50 for my last account, that rebuild, that's up 1,000. So I have a month to trade that, and there's really just no point for me to pay for another account that's in like the same spot. Like, why would I pay $50 more to then trade an account that I currently have? Like, if that makes sense. So, real quick, my plan will be to trade on the account. I'm obviously trading tomorrow. The account now that's up 1,000. I want to change to where I'm only taking about 2 to maximum 4 micros, and I think that kind of just puts me around $200 risk per trade. I think I really want to risk a lot less. I don't want to have a single loss that's more than $250. I'm gonna have to figure that out because the way that in IFVGs work, I don't really like. I don't know what to switch to, and I'm not trying to switch strategies per se, but I just feel like inverses are holding me back from better entries. Like, I read the market better than I need IFVGs for, and what I mean by that is I just feel like I miss out on a better risk to reward because I'm waiting for an inverse, and I can anticipate the market to be going lower, right, without an inverse. And inverses are just, you have to have a bigger stop naturally because you're chasing the momentum down. Like, you're chasing the momentum if you're trading short, right, and you're trying to inverse this gap here, right? There's probably a really good entry up here, right? But instead of taking a good entry here, you're waiting for this whole gap to break, and this gap is 30 points. Like, you're giving up 30 points of a run to then get in 30 points lower than where you could have gotten in. So, like, I don't want to just switch strategies, but the way I view price is unique. I don't view price through only inverse fair value gap lens. I view price through ICT concepts and understand it well to where I feel like I could move away from waiting for inverse fair value gap entries only and maybe start executing off of something else. But I'm not really sure what I want to do or how I want to go about that, because this was a nicer entry in my opinion here, right? We took out the high of the day yesterday. That's what this line is. We took the high of the day out. We ended up selling off. And actually, anyone that's watching the video right now, I'm gonna say why it's a little bit early in, so you know what to look out for. I'm gonna go over my YouTube analytics just for fun to show you guys kind of how much I've started earning now that you guys might notice some ads on my videos. So I kind of want to show you guys how much money I make on my YouTube channel, which is kind of cool to see. But I'll show that a little bit in the end. I kind of have some stuff I want to talk about first. But if you see this part, stick around till then, or you can just skip through to the part that has that if you so desire. But my point being, so we took the liquidity, we're in the daily fair value gap, we go lower, right? And here, I was framing an idea of maybe going lower from here, right? We come back up, we resweep this high, we remanipulate the high. We have an SMT on the higher time frame. And like from, I can't just wiggle my mouse, right? This is the daily fair value gap, this is the SMT, right? We get this, and right here, this looked good to me. I saw the inverse, but look, get in here, you're risking all of this, right? And it's just so like chase feeling, right? Whereas if you get a fair value gap tap here, boom, okay, you can risk, right? If you took it off the 2 minute, boom, you're risking like this high here. You have a tight risk, right? You can expect price to pull up to here and be valid, whatever. Then we end up coming back up, resweeping the high. We inverse this fair value gap here, right? But in the way I like to enter, I wouldn't like to get in on this, right? If I get in here, stop as a close back above, we would have a great move, right? Because my target, again, I'm framing this all off of these equal lows here. These equal lows is how I frame my trade. Context to that as well is manipulation off the 1 minute. If we draw on the SD, right, off the 1 minute, the 1 minute manipulation leg was here. Where can we go? We actually do hit the projection of the 2 to 2.5, but that lines up perfectly with the equal lows, right? How did I draw that in? If this is the manipulation leg, boom, this swing low, swing high, that's manipulation leg. That's where you can expect price to draw towards. Boom, really good today for that. But again, we inverse this area here, and that's how I can maybe start using inverse fair value gaps, right? And then if I drop down into the lower time frame, what else do we get here on the lower time frame, right? What do we get? We get a change in state delivery here on the smaller time frame. Boom. We pull back up to the change in state delivery here. We have these up close candles, followed by change in state. Boom. We pull back up to there. We get a reaction here. We displace with fair value gaps. We pull back up into the fair value gap, and then we turtle soup 3 drive, or are those equal highs? I don't know. We 3 drive, we sweep them out. Boom. Turtle soup here. That's the best possible entry. We get displacement. Then you can end up entering off this order block or this fair value gap, stop above this high. And now you have a lot more custom risk, right? And again, this is like somewhat hypothetical because I don't trade like this, but now you have a 19-point stop loss, right? You have a 19-point stop loss because what have you seen? You saw change state delivery, pull back to it, respecting it, displacement lower, holding this imbalance, right? If you, worst case, took an entry here, you probably get stopped, right? But then you get a move back down again, and then this one's a little more aggressive because we actually displaced through a low. We displaced through a swing low right here. Boom, pull back. Right, and this is all kind of hypothetical because it's not really how I trade, so I don't know if it really makes sense, but then you can target lower. Right, this is a good trade in my opinion. That's the trade I wanted. And I think for me, I have the draw and liquidity well most of the time. I know where price is drawing towards. But I don't know. I just feel like my entries is leaving a little bit to be desired. And I'll go over the trade that I lost on, right, and what I was thinking about here. And this was just because we made an SMT here, right, and I wanted to see the whole day. When I didn't get this move down, I wanted to see this 15-minute get retraded to, boom, so this became a target at some point. I wanted to see this 5-minute become a turtle soup right here, which notice what we actually end up doing here, this 5-minute high, turtle soup here. We also get a re-turtle soup here, which actually provides a really excellent entry, and I'll go over that, but this is the 15-minute fair value gap. So we don't take this low. We have relative equal lows. We put in a low here. I still think the draw and liquidity is lower, right? I think we're going to hold and respect this area and go lower. This is just wonky because of market close, right? And then, anyways, so if we drop down to the 2-minute, I was like, okay, cool. I saw this big imbalance. I wanted to see price hit this high here. This is my target. This fair value gap, it's a 15-minute. I expect us to go here to then go lower, right? So what did I do? Since the account rebuild, and still, this doesn't change much, but I kind of, I'm going to give myself a little pity party here, but I enter on this close, right? I draw my stop at 50 points because I entered with 10 micros, so 1 full contract. So I was risking $1,000. 50 points is $1,000. To target 50 points. this high here. 50 points. I was risking 1,000, make 1,000, 1-to-1, right? And again, not saying that whatever, I'm not trying to say anything, but notice the stop loss, right? I'm not saying anything like that, that this is whatever. I'm not saying that this shouldn't have happened or whatever, but I have to say it is a little bit, it's a little funny, right? That we get stopped like that, right? Again, should I have risked that much money? No, of course not. But, it is a little bit crazy that it literally bottom ticks me, full margin, runs to my target. So again, my draw on liquidity was right. And again, I don't think I will fully move away from inverse fair value gaps because I understand them the best. They make sense to me because the trade of the day was here, right? And it was a little bit sloppy, but the trade of the day was here. We had a 5-minute inverse, right? This whole thing was a 5-minute inverse fair value gap. So boom, we have the context here. We have the context. We're holding that area, right? We trade back to equilibrium of this range. Boom, 62% OTE. What else do we get? We get a bunch of low resistance liquidity right here. Boom. And then what do we get? We get a pullback to the furthest fair value gap, right? This is the most discounted fair value gap, right? We hold it perfectly. And then what do we get out of it? We get a 2-minute inverse, right? So this would have been a beautiful setup right here. So this would have been a great trade. I just didn't align myself with it, right? I could have had a stop there, right? Target here, boom, 71 points. Target this high with a runner. And then if I took that in 2 contracts, 70 points, that's 140 plus 100, 200, $340. Risking 120, right? Risking 120. Go to break even at this high. Let the trade play out. So it's not really my model, right? And I was really frustrated today because just this trade failing and losing that account. Because again, I didn't want to pay the rebill, but if I did win the trade, I would have paid it happily because it would have put my account really positive. I've been close to passing the account. And it just felt like unlucky. It just felt like everything was against me, that we just chop and chop and chop for forever. I mean, I was in this trade for an hour, literally an hour. And I was like, what are the odds that ticks here gives me a perfect setup, and just runs exactly to my target, right? That's the setup of the day for me in the terms of the context. And then the setup I was talking about over here, because we turtle soup this high, right? I was anticipating this 5-minute high to get turtle souped, right? We take it out. We don't get anything clean in here. Chop, 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 chop. Boom. We sweep above this high. Fair value gap up. Fair value gap down. This is a beautiful signature. Enter off this or enter off the retap. Whatever. Get in on this trade. Boom. Trades down. Hits this low. You go to break even. And then you target lower, right? Again, end of day price was a little weird. But this would have been beautiful, right? This is beautiful. Turtle soup in an area you can expect to reject. Inverse. This is setup. Boom. You get in. You execute, right? And instantly after losing my trade, I'll just make this bigger because I'm kind of done on the charts, but I was really frustrated today. I was really frustrated just because I can't quite understand why I can't succeed yet. And again, today's trade wasn't the habits that I normally will do to succeed, and I understand that, but it's just like, it just feels like I can't even get lucky, or I can't even have one, I shouldn't have risked that much money and I shouldn't have entered there, but come on, what are the odds that I risk 1-to-1 and it bottom takes the stop and runs straight to where I expect the price to go? And it's it's so demotivating because I really feel like I'm getting better every day. I feel like I know what I'm looking for, but I'm just losing confidence, and I haven't had a amazing setup in a long time. I haven't like there's just a lot of stuff that hasn't happened in a long time. Like I haven't been able to just hold my trades good when I'm in a great winter. I haven't been able to, like, there's just a lot of stuff that is just weighing on my mind. I'm scared to drop my size. I'm scared to trade 2 micros because even though we just went over the fact that literally if I just took this trade here and I held it with 2 micros, I let the trade play out, was risking whatever I was risking, but maybe we could have even risked here. 22 points, whatever, barely risk anything. Risking less than $100, right? And let the trade play out and hit my take profits. Worst case scenario, I take 1 off here, right? Low hanging fruit. 2 to 1 risk to reward, or should be pretty much. 42 points. Get $80 on this one. Let my trade play out. And worst case, then we take this high, 66 points. So 120 plus 80, $200. I'm risking less. I'm risking like, at worst case, I'm risking 34 times 2, 70, 140. I'm risking 140 to make 200. Good risk reward, positive risk reward. Whatever. I don't know exactly how I would perfectly execute in a perfect world because I haven't been able to just get into enough good trades and hold properly in practice. I haven't been able to practice holding to this target. This is where I would love to be able to get to where I could. Oh, I forgot that I'm not showing the screen, but I was kind of just going over that previous trade that we were talking about. Dang it. Why is this wonky? Why can't I change this? Oh my gosh, I'm gonna mess this up. Okay, I was just going over this trade here, right here. Like I was just saying, different ways I would have held that trade, right? Again, going back to that point, just like I don't know how to properly express this, so I like bear with me if you're watching this video, because it's just kind of like this video is just a kind of just like I can't understand. Like I can see it, I can see the trades, I understand the draw and liquidity. I have good targets. I know when I should be trading, when I shouldn't be trading. I know when a quality entry looks like. And it's just like I either don't get exactly what I want to see and it runs without me, and it's like, oh, I can just say, oh, like, cool, I did my job, it ran without me, whatever. But that hurts. That's annoying. That's frustrating. That's difficult to watch happen all the time. And it's just like, well, why didn't I get that? Why did I miss this? Why was I waiting for this? And it just makes you second guess yourself. And then I need to drop my size. I absolutely need to drop my size. I need to figure out how to risk less. I need to be more confident in letting my trades play out. But I'm almost like scared. I'm almost scared to do the right things because then it's like if it doesn't work, then what? What can I blame? If I can't blame over leveraging, if I can't blame over trading, if I can't blame taking bad setups, if I can't blame whatever, right? If I don't have something to blame, it's scarier because then it's like, okay, I'm not where I want to be. So it's almost like I'm doing things I know don't work so that I have something to blame when it doesn't work instead of having something to celebrate when it does work, right? Because I know that these setups can work. I know they show up. I know that they're repeatable. And I know what I'm looking for. But it's almost like I'm afraid to size down. I'm afraid to size down because then maybe it might take me a lot longer to pass my eval. Newsflash, I've never even passed an eval anyways. So passing the eval over the course of 2 months, trading the same one for 2 months and passing it is still progress. And I don't accept that. I'm not looking at it as progress. I'm looking at it as how much did I make this week, right? If I can consistently do a $500 week, that $500 week can become a $5,000 week or $50,000 week, right? Because let's just say that $500 week that we consistently do, I trade with 2 micros, and let me pull up my phone and do some math, right? If I'm trading $500 divided by 2 micros, I need to average 125 points a week. 125 divided by 5, that's 25 points a day, right? Let's just say that our average win is 50 points. 50 times 4. $200. Times that by 3. We win 3 days of the week. Right? Whatever. The math doesn't really matter as much as the fact that if I can just be consistent, the numbers will just get better and they'll be more sexy and they'll be what I want them to be. But I'm afraid to scale down. I'm afraid to size down. I'm afraid to risk less. I'm afraid to sit there with one contract because then mentally it's like, oh, I'm not really making that much. Like, maybe I should just, whatever. Why would I need to do any of that? Why can't I just trade 2 contracts, 2 micros, not worry about how much this person makes, how much this person made, how much I could make here, what I could do this, the other, how quickly I can pass this account? Because I think it's still just coming down to the fact that I really just want to pass an account. I really just want to pass an account. I want to pass one. And I want to do it within a week, 2 weeks. Honestly, it's like I never expect to do it in 1 week, but it's like, oh, if I could just do it in 2 weeks. Then it's like, oh, I just have to make 1,500 2 weeks in a row. That means I only have to make around $300 every day. And if I have a 100% win rate. The reality is I'm not going to have a 100% win rate. The reality is it's just not going to happen that way. And even though I don't tell myself I have to do it in a week or 2 weeks or 3 weeks or in the month, I kind of do. And I want to blame the prop firms because they have the rebuild date. So whenever rebuild comes up, it pushes me pressure to push the gas and over leverage and over trade and scalp and take things that aren't there. So this next account, I'm making a promise to myself that I'm not going to worry about the rebuild date. I'm not stopping this. I'm not going to stop trading this account until I pass or fail it. If a rebuild date comes up and I'm down 50% margin, so if it's $2,000 stop loss, right, or $2,000 buffer in my account, if I only have 1,000, I'm not going to rebuild because I'm not paying $50 for half margin. I just won't do it. And that's fine. But if I am profitable, right, if I'm up over $1,000, I will for sure keep the account. But the rules I am going to, and it's like, this might just be like, oh, like, just spit out your rules, man. Like what's the problem? I have my rules written up here, right? They're from a while ago. But I have to stick to them. I'm going to reread them out, and I will stick to them, right? Every single day, no matter what, I'm going to stick to these rules. I will only take good setups where I have an edge with conviction. That's a no-brainer. But there's a lot of days where I don't listen to that. I will never take a setup again that's not the case. Or I'll try to, obviously. Once I enter the trade, I can't take profits without my first target getting taken. So if I'm in this trade here, and I'm going to make the same with break even, I'm not going to break even anymore unless, boom, we hit, oh, okay, I can't show you this trade. But, I mean, I can. Let me just move this thing. The heck, dude? I don't understand OBS. Okay. This trade here, right? If I got in this trade, I am not allowed to take profit until this high, right here. Why? Because this is the target. This is the draw on liquidity. This is the real draw on liquidity. So I need to get better just holding for this instead of low-hanging fruit, right? I've got so obsessed with taking low-hanging fruit that this is my target most of the time. I want to move away from that. It's either stop loss or take profit, right? I'm not going to break even. I'm not closing the trade early. It plays out, right? Because if I get in this trade, it works, right? It could have lost, it could have failed, whatever, but it works, right? This was a setup that I actually did like that failed, right? And that's the reality right here. This setup failed. I could not tell you why. I mean, yeah, honestly, I can't tell you why. I like the setup still, right? But what happens? You risk 17 points. You lose 17 points. You're going to get 35 if it works. Next trade. Sets up. A few minutes later. You're risking 18 points. When this fair value gap opens, you can risk less, 15 points, right? I want to start being a little bit more aggressive with my stop loss because I feel like I risk way too much. And I just feel like because if time and price aligns, you get a run like this, right? You don't chop around your stop loss. Time and price aligns. If I get an inverse that gives me a fair value gap, my stop loss is underneath the fair value gap. If I get wicked out, I get wicked out. I learn from it. I can't take profits, and I don't move to break even. It's stop loss or PT. I need that to happen. So I'm only taking good setups, and I'm holding my trades properly. That alone would make me profitable. That alone. My other rules is just risk management stuff. 2 losses on the day, or my daily loss target gets hit. Done for the day no matter what. I want to say my daily loss limit is 400, and that's what it will be. So I want to risk no more than 200 per trade, but wiggle room 250, whatever, cool. 200 should be my max, right? And if I take a $200 loss, obviously I can only risk 200. If I hit $400, my day is done, right? My day is done. I'm not trading anymore. $400 the cutoff. Why? Because I have $2,000 buffer. That is 5 days. That's 5 straight losing days, which is fine. If I have 5 straight losing days of the max loss where I take 2 losses and I lose 5 straight days where I take 2 losses, then I deserve the blow the account. But that would mean that I'm losing 10 straight trades because I'm risking 200 per trade, no more. I will never risk more than $200 per trade again until I pass this account. I don't care how long it takes. Why? Because if I risk $200 on this trade, and let's just say my stop was here, 22, let's see how many contracts we can take. 200 divided by 23. We can take 4 contracts on this trade. We do the math in our head. Okay, I'm going to risk 4 contracts. Boom, we get in 4 contracts. What do we do? Maybe we scale one at low-hanging fruit. Boom, 42 points. Then we scale one at this high, right here, 68 points. Then we hold the rest to this high. Boom, 103, plus 103, plus 103. With the $200 risk, even scaling, right, we could have held the whole trade here and made a crap ton. $200 risk, we make $632. That means that then, off that one trade, I could lose 3 straight trades. Obviously, this is a perfect world. But what would happen today if this is what I did, right? 200, I risk 200 this trade, loses. All right, cool, right? This one is, let's go on the 2 minute here, right? This one looks all right because we have a 5 minute, we have an inverse, boom. We resweep liquidity, boom. Inverse, okay, cool. 200 negative, boom, come up. $400 positive day, right? So I'm going to stick to $200, 2 losses. If I lose twice, I don't care if the third one wins. I don't care. I'll paper it, whatever. I do not care. I paper trade this on my eval. Instantly works. After losing on this, as soon as I set up not eval, paper trade on my paper account. Instantly works. I was pretty upset, but I took the trade because that's where I have conviction in this trade, right? Because I know what I'm looking for. I know what I'm looking for. I know what I'm looking for. If I risk $200, I'm not increasing my risk. I'm not risking more than $200 per trade until I pass this account. Because I know for a fact it will make me less emotional. Because now I can only lose 400 in the whole day if I lose 2 trades. And it will just make me more likely hold my trades, right? Because if I know I can only, why would I take it all off here or take it here? Why would I scale something here? Why would I squeeze my trade to break even? I can only lose 200, right? It's not, let me get to break even here because I'm not trying to lose, right? Like if I'm risking $500 here, it goes up here, this red candle comes in. Man, I don't really want to lose 500. I'm just going to go break even. Boom, stops me at break even, goes hits take profit. Now you didn't make any money. Now you didn't make anything. Oh, okay, I'm only risking 200. Oh, that's a black candle right here, a red candle, whatever. I don't really like that. I might lose on this trade. Your stop loss is just chilling down here. It hasn't moved. I don't know. It might not work. I'm gonna just let it play out. I'm only risking 200. Worst case scenario. I know I have a high win percentage. I'm gonna just trust my edge over the long run, over the long period of time, and just let my trade play out. Boom, take profit. So that's my new risk management, my rules. I'm going to literally just twist my arm and force myself to do it, because when I look through today, the only setups I see is this one fails, right? This setup fails, right here. If I took this trade and I was risking $200, I'd have to have a 60-point stop loss. How would that work for $200? $200 divided by 60 points. I could only take one contract. One contract. One micro. What do we get on this micro, though? Boom. We hold to there. If I'm risking one micro, I can hold to low a day here. Low of market open. Boom. 154 points. Times by 2. $300 still. Over a 1-to-1. As long as it's above a 1-to-1, you can take it. Right? But I'm not really counting this as a setup. But regardless, this setup could have failed. Right? Cool. What else have we got? Right? We had this setup here. This setup worked. This setup failed. Cool. Right? It doesn't matter which ones fail, which ones don't. It just matters about when you do get in the one that wins, you're in a position that you can benefit from, right? What did we see yesterday? What did we see yesterday? Yesterday I lost $500 one trade. What could I have done differently? Boom, first trade, lose $200. Next trade, we get in. Boom, we get in on this trade. We lost 200 before. Where are we risking? I'm risking here. Let's just be generous, right? 38 points. Let's just be generous. 38. $200 divided by 38 points. Divide by 2. I can risk 2.5 contracts. Right? Maybe I risk here 32 points, right? Just so I can get the third contract. 200 divided by, and it doesn't have to be exactly, like, I don't need it to be exactly $400. Like, if I lose $430, I'm not gonna just, I'm not gonna lose my mind, right? That's what I'm trying to get at here. So let's say this: 38 points, 38 times 6. I'd be risking $228. I'm not nitpicking. 28 extra dollars, right? I'm not going to be sitting here and be like, I cannot risk $228. It has to be 200 if I wanted to take a third contract. Or we just do the right thing and risk 2 contracts. What's a 1-to-1? 38 points. This is a 1-to-1, so this could be a scalable point on one of the contracts. But as we remember, the draw on liquidity I had was this high. So let's just say I took this trade and got in, right? And let's just say we took this with 2 contracts. Trade comes up, boom. What can we do? We can now scale in to a position. How much can we add here, right? If this is giving me my stop loss here, now this low, when we inverse, what can I do? I don't have to go crazy, right? This is still my target. If I add in contracts here, and my fill is here now, one contract, or if I add more contracts and this is still my target, right? What can I do? How would this work? My stop loss is now at this low. I can add in more contracts to make more money. So if I add 2 more micros, 30 times 4, I'm benefiting another $120. And what risk do I put on the table here? I move my stop loss to here, 30 points, right? A 1-to-1. But what happens? We average in the fill, right? So if we're in this trade here on 2 contracts, if we're in this trade with 2 contracts, right, from the beginning, this is our entry, this is where we got filled. The midpoint between the two, since we added the same amount, we get in here. Boom. Our fill now, our break even gets put to here, right? So now we're in 4 contracts, filled here, right? Targeting here. Targeting there. So now we're break even, We can't lose on this trade, right? And we can gain 72 points across the micros. 72 points across 4. 72 times $8. $576. That's just a way that I could have pyramided, right? $570. Let's see if that makes sense. So if we hold 2, 115 times 2 plus 30, so 60 times by 2. 580. Yep, that's exactly how it would work. So that's an example of pyramiding. I don't have to pyramid there because I don't need a pyramid. I can just hold this trade, right, and risk the original and let it play out. So 115 times by 4 and make 460, right? A big risk reward day. And just let my trade play out. So that's kind of what I want to do. And this video, I'm sorry for how long it is, but I really just need to talk to myself about this because, again, this is my journal. And it's just been so frustrating because I'm just underperforming for what I know I'm capable of. And I think a lot of it has to do with my risk just being too high, right? Because this was my idea. First trade, lost. If I had the peace of mind to be able to take the second trade and let it play out, boom, I'm only risking 200, right? I would have lost, if this trade failed, I would have lost less than I lost on taking the first trade. And yesterday I lost $500. I would have lost less, right? So that's kind of just where I'm trying to get to. And now for the people that were sticking around to see the YouTube money, if anyone's still here, I doubt it. This is actually kind of cool, right? So I've made $21.85. I've only been monetized for a few days. I've only been monetized since the 27th. So it has only been 1, 2, 3, 4, 5, 6, 7, 8 days. So if we run some math on that, 8 days, 365 divided by 8 times by 21.8. I'm on track to make $1,000 this year from YouTube. Yesterday I made $5.64 because you guys love to watch people lose. So my video of losing $500 made a lot of money because we actually got a lot more views than normal, which is really cool. We got 15 subscribers. I don't know if you guys ever seen the dashboard of content creation. It's just really interesting. This video, I wish I was monetized when I first posted it because it's made me $3 and it's only been getting me money for these views, like right here. So imagine if I got all this. Like this would be like a $50 to $100 video, which is pretty sick. But it gets around 100 views every 2 days. $3 from this video I made. Right, 21 total. So the estimated revenue. Here we go. Revenue. So September I made $9 so far. I made 12 in August. It's cool to see. I made $4 from yesterday's video, $3 from the transformation video or the journey, $3 from that video, $2.60, $2. I consistently make around. I've gotten literally no money from the shorts. I haven't posted a short in a long time. I don't plan on it. But it actually is pretty interesting to look at because, if you thought that you'd make more money, you don't. If you thought that you make less, you don't. But I'm happy with it because I'm on pace to cover my evaluation, my combine fees, which was kind of like a goal. Once I got monetized, I was kind of like, okay, if I can cover my monetization fees or my trading fees, then that would be pretty dope. Which I think we're on pace because we've only been monetized for 8 days. So if we keep it up, we can cover our evaluation once a month, which is cool. So I'm basically now trading for free. So after a year of trying and a lot of money lost on evals, I now trade for free until I pass my evals and then pay the activation fee. Then it becomes more expensive, but this is cool, dude. I actually thought this was pretty cool. $21 doesn't seem like much, but that's $21 I did not have, and I did not start making these videos for the money. I'm not making them currently for the money because, as you can see, it's $2. Like I could go walk around a parking lot and find $2 if I really want to. But in terms of doing something I already do and making $21, it's pretty crazy. That's officially 1 point on the NASDAQ with one contract. So we scalped 1 point. And I appreciate you guys that subscribe and stuff. Because again, $21 is not nothing. And we have, wow, this is why if you make YouTube videos, it's really depressing to look at like the numbers. Because 327 subscribers is really good. But it says 46% less than the previous 28 days. That's sad, right? Like yesterday's video did well because again, you guys love seeing people lose. So 1,100 views. It's like, this is kind of like trading. When you see the numbers, like 600 views, like I average around 500 now, which is really like, it's just insane. Like if we go down, if we really go down to like the first videos, dude. Is this my first ever video? No, this is not. This is June 7th, right? June 7th, 41 views. Right, let's keep going. Let's keep going. Right, let's go to the start. This video has 200 views now because I guess people go to my oldest video. Like these never had views. Like these did not have views. I don't know why these, like, I guess they just slowly pick up the algorithm now that people see my channel. I promise, like, none of these videos had views. Like, this was the first video right here, the reality of day trading. I remember posting this, and it got, like, 100 views, and I was like, wow. Like, I was like, wow, this video right here, I remember it getting, first 4 days. 5 days, it hit 500 views. I gained 10 subscribers. I made 3 cents off this video. I was like, wow. Like, this was before I ever even thought about even ever reaching 1,000 subscribers, or let alone having the watch hours to get monetized. Like, this is crazy. This was the first video that I was like, wow, like I actually hit the YouTube algorithm. And then I just kept posting them. So we have a ton of videos on this now. So 540, 300, 180. And then we go back down to reality, 27 views, 30 views, 44 views, 45 views, 34 views. Right, we didn't even get people commenting, right? We don't even have comments coming in. 132, 177, 173, 433. So this one, breaking 1K on the Funded for the first time. That one was sick, right? Good day. Boom, we had a lot of comments that day. And just steady growth, 34 views, 25 views, 17 views. Focus on building confidence in trading. 17 views, 2 comments. Like, and again, I'm not like saying this like as if I have a billion subscribers or anything, but 1,000 views, 600 views, 700 views, 500 views, 700, 800, 500, 1,000, 3,000 view videos in a row, 60, 670, 1,500. Again, you guys always like when it's about not being profitable, right? When I have good days, this day did well, 650. Like, but I'm just trying to demonstrate, I guess, that just like with trading, with YouTube, there's ups and downs, right? 600. And again, this is crazy. Like, that's why I went back. 600 views is crazy compared to what I did get. And I genuinely can't believe I averaged 500 to 600 views a video. I personally don't believe that, right? Because I have a personal account that I use. I hope I'm not leaking any information, right? I have a personal account where I used to post, and I'm going to start posting again on. You don't need to go follow. This is not like a shout out or anything. And it pulls all right views, right? But it's so inconsistent, right? And it's hard to pull views. Like, it's hard to pull views. I like tried on these videos. Like, I genuinely tried. I sat there, edited. And like, I tried. Like, I used to post fitness content, even though I look kind of small these days because I don't really work out as often as YouTube, yada, 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 a lot of stuff into that. But I actually like tried on this account, right? And it grew. It has like 500 subscribers. I had a TikTok account. We pulled 1,000 views on the last video we posted, right? But YouTube felt so hard and impossible. And I was never consistent like I was on this account. And that's why this account actually like has some traction. And I want to be consistent on this account, because I really do enjoy YouTube. But wow, dude, like, I can't believe it. I have 75,000 views on this account, all long form pretty much, minus some shorts. We have 1,601 subscribers. I've made money on this YouTube account, right? I've never dreamed of making money on YouTube. I never dreamed of getting this many views. So I really appreciate all you guys that watch these videos. Shout out to these guys. I don't know why it shows them because specifically. But look at this, dude. When I go onto the comments, I respond to all of them, obviously. You guys know. Bro, let me. I'm just going to shout out some of the people that I see every single day on my comments. And I really appreciate you guys. And I apologize if I don't call your name. Like, I honestly, it's like the profile pictures. This doesn't stick out to me. So I apologize. Like, you might comment here a lot. You might not. But it's just the profile doesn't stand out. Let's see some people that I know for sure comment every day. This guy right here, dinosaur chart pattern user, every single day with the thumbs up. I see that every single day right here. He'll sometimes leave some words, whenever he's feeling like it. But most of the time, just a thumbs up, cool. I feel like I've seen him on my thing once or twice. Again, it's the profile pictures. I've seen him a lot. This guy, he doesn't even have a profile picture, but I remember him. Seabass Sumana, dude, I'm sorry, 98. Bro comments consistently. Receive one of the highest number of hearts from me, right? That shows that he consistently comments. I see him all the time. Who is this? I thought it was one of my friends. It's not.
Markets are open.
I don't know why I said that. I've seen Alex comment a good amount. Alex, you be posting on YouTube? Thought with the profile picture maybe you did. I've seen this guy post a good amount, or comment. Vincent, bro, I see you comment all the time. I appreciate it. Like, pop out AD. I see you comment a lot, bro. I really appreciate. See it. I appreciate it. Man who sold the world. I see your comments all the time. It's crazy. Like TB4. I see your stuff. Look, you got the purple heart. HR Capital. This guy be posting as well now. He posts his stuff. So you guys can check his stuff out if you see him in my comments. I don't subscribe to anyone on this account. It's like a taboo thing. So that's why it says that I'm not subscribed to you. It's just because I strictly use this account to post. I have like a kind of like, what's the word? Not OCD, but like, what's like the word when you do something, kind of like superstition, right? Kind of like a superstition that I want to just not follow anyone on this account and just grow organically. I don't know how to explain it, but comments all the time. Again, I could go through a lot of these guys, and I'm sorry. Ben Lawson, all the time, man. I see him all the time. Look, the purple heart, because I like his stuff all the time, right? I really, it blows my mind that I have people that pull up to these videos and comment all the time, and that, because there's people I watch, dude. Like, I'll go on my account here and go through my subscriptions that I'm subscribed to. Or I guess I don't have to. Dang, we lost a subscriber, I think. No, we didn't. But I know the dude, man, I'm going to butcher his name, Blazin or whatever. He's been killing it with his stuff. He has around 2,000 something subscribers, I think. But he posts trading stuff, does a lot better trading than I do. So go watch his stuff if you're, trying to make money. But it's crazy that I'm in a position kind of like that where he's someone that I recognize on my YouTube page. When I see his videos pop up, I'll watch them most of his videos, and I remember that, oh, that's him posting. When I see his this is my long way of getting around to the fact that I just find it crazy that I'm in this position, and it might seem like nothing. It might seem very small to you guys because it is very small. But it means a lot more to me than you guys might have expected, because it's like building a little community, man. It's really interesting to me, and it keeps me sane, because trading is a very lonely day. It's a very lonely job. It's a very lonely world. It's a very depressing world. I'm not gonna lie, for me at least. because it's mentally draining. It's very hard. It's very slow. So I really appreciate it, because if I can't come on here and talk for 50 minutes, why do you guys think I come on here and talk for 50 minutes? It's because I have nothing else to do with myself, bro. I have nothing else to do. I have no one to talk to. I have no one to talk to. And that's exaggeration. I have my family. I have some friends. Like, I don't need you guys to worry about me, but I get to come on here, talk about something I enjoy, make a little bit of money from it, right? Build a community, and it's just so cool. So I really appreciate everyone that watches these videos. This video is way too long. Hopefully Friday we have a good day. I'm sticking to my rules. We're going to have a good day tomorrow, because if I stick to my rules, it's a good day. So there's no longer a need for me to be fearful of tomorrow and the trading day and whatever, because I know that no matter what, if I follow my rules, I can't lose more than $400, and it's going to be a good day. So I appreciate you guys. I'll see you guys tomorrow. Peace.